Intuit just dropped their fourth quarter earnings, and the numbers are absolutely crushing expectations. We're talking about a company that's not just growing, they're completely transforming how small businesses operate with AI agents that are exceeding all projections. If you're an investor or business owner, you need to hear what CEO Sasan Goodarzi just revealed about their game-changing platform strategy. Starting with top-line revenue, the original estimate for Q4 was $3.74 billion. The company actually reported revenue of $3.83 billion, surpassing expectations by 2.4%. This quarterly revenue also marked a significant 20.4% increase compared to the $3.18 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was $2.66. The company actually reported an EPS of $2.75, exceeding expectations by 3.4%. This result also reflects a 38.2% increase compared to the $1.99 per share reported in the same quarter last year. Now, let's dive into the financial metrics that matter most. Operating margin expansion continues to be a standout story for Intuit. They've managed to grow revenue by 16% while simultaneously expanding margins, a feat that's becoming increasingly rare in today's market. This demonstrates exceptional operational discipline and the scalability of their platform model. Customer growth is accelerating dramatically in the mid-market segment. We're seeing 23% growth in combined QuickBooks Advanced and Intuit Enterprise Suite customers. This isn't just any customer growth. These are higher-value customers with more complex needs who generate significantly more revenue per customer. The mid-market represents an enormous untapped opportunity. All-in ecosystem revenue jumped 21% in the quarter, which tells us that Intuit's strategy of consolidating customer spend onto their platform is working. When customers use multiple Intuit services, they stick around longer and spend more money. This ecosystem approach creates powerful competitive moats. Online payment volume growth remains steady at 18%, showing consistent momentum in their payments business. This metric is crucial because payments revenue has higher margins and creates sticky customer relationships. Every transaction process strengthens Intuit's position in the small business ecosystem. Credit Karma revenue surged 34% in the quarter, proving that their consumer platform strategy is paying off. This growth is particularly impressive because it's being driven by data and AI improvements that help customers get approved for better financial products. The integration with TurboTax is creating meaningful cross-selling opportunities. Stock repurchases totaled $2.8 billion for the full year, demonstrating management's confidence in their business model and commitment to returning cash to shareholders. This level of buyback activity signals strong cash generation and belief in their long-term prospects. Now, let's talk about the strategic insights that could reshape entire industries. The AI agent's launch is exceeding all engagement targets. CEO Sasan Goodarzi revealed that millions of customers are already engaging with their new AI agents just 1 month after launch, with repeat usage rates significantly above expectations. This isn't just hype. Customers are finding real value. Their virtual team platform is driving measurable customer value through automation. These AI agents are completing tasks like following up on unpaid invoices and helping customers access credit, reducing manual work by up to 60% in some cases. We're witnessing the early stages of AI actually delivering on its productivity promises. The mid-market TAM represents an $89 billion opportunity that Intuit is just beginning to penetrate. They're targeting businesses with $2.5 million to $100 million in annual revenue, a sweet spot where companies need sophisticated tools but can't afford enterprise-level solutions. With quarterly product releases and growing partnerships with accounting firms, they're positioned to capture significant market share. TurboTax Live revenue jumped 47% this year, demonstrating breakthrough adoption in the assisted tax category. This growth rate is more than double their long-term target, showing that their combination of AI and human experts is resonating with customers who want help with their taxes but don't want to visit a traditional tax office. MailChimp is expected to return to growth after being a drag on overall business performance. Management expects the email marketing platform to exit fiscal 2026 growing in double digits, driven by improvements in user experience and a stronger sales force targeting mid-market customers. Perhaps most importantly, platform consolidation is creating 300% ROI for customers according to a recent Forrester study. When businesses consolidate their various software tools onto Intuit's platform, they don't just save money, they make better decisions because all their data is in one place. This value proposition could drive massive customer migration in the coming years. Intuit is positioning itself as the operating system for small and medium-sized businesses. With AI agents handling routine tasks and human experts available when needed, they're creating a compelling alternative to the fragmented software landscape most businesses currently navigate. The financial results we're seeing today are likely just the beginning of a much larger transformation. That wraps up our recap of Intuit's fourth quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.